Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show, we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at SchnellInvestor, and you can also find my blogs on gregschnell.com as well as StockCharts.com. So this week, I would like to cover off commodities, and there's a big reason for that. We have a Fed meeting tomorrow. We've had the tech stocks running for roughly 3 months. And the commodity charts, while still struggling, look to me like there might be an opportunity for a change, and we'd obviously like to be ready for that if that was going to happen. So I think it would be timely for us to cover this off. So in my regular weekly newsletters to clients, I have always have a place in there for commodities, and one of the things that's been hard is the US dollar has been rising. So as we see the US dollar rising, that usually makes it difficult for commodities to go higher. I think that's one of the reasons that we might have an opportunity here. So I'm going to come back to this commodities page, but what I want to show is just getting to look at the US dollar on the different time frames, and the reason for that, it's pretty important to understand what's going on, not just on a minute-to-minute basis, but this is the big picture for the U.S. dollar. We've had this big 3-year cycle low, and we're coming out of that now. We're trying to get above this black trend line, and the real question is, do we have enough energy, or do we come back down before we make another run up? And we really need to answer that. So at the end of Monday, we were sitting right on this black line, and I'm recording this midday Tuesday. So what we want to watch for now is how the US dollar responds. And when I look at Martin Pring's work, this is with his special K, it's turning up here, but it's already started to roll over, which is a little bit of a surprise, just because it looked like it was going to take off and go on a run for the roses like this. So the real question is, do we have enough momentum to do that? And I don't have the answer, but I will show you as we look at these big cycles. You can see we've kind of had these different 3-year lows, and we're right at this trend line right now. So the question is, do we have enough power to get back through that, or are we going to stall here and need more time? We don't have an answer just yet, but this stalling level, I'll call it 93 cents, but you could pick, I'll call it a finer level in there. Here is the zoom in, and you can see 93 cents. We're kind of banging our head against it. There was a downtrend line. 93.32 was the closing, the daily close back in March. And so what happened was the dollar was declining, commodities went on a big surge, and then mid-May, commodities basically stalled and technology took over, and we saw that run up. So now the question is, does the dollar break higher? And if the dollar breaks higher here, can we get back on the commodities bandwagon? And the answer to that is probably not. Even if you got on it, you probably wouldn't make a lot of money in it. But if the dollar was to roll over right here, we want to be ready to get back into commodities. So as the problem I have is my bias is that it wants to go higher, but my momentum indicator, you can see on the daily chart here, hasn't gone any higher, and now it has a lower high in momentum while a higher high in price. So perhaps the dollar's ready to roll over, and if that's the case, I want to be very ready to jump on the bandwagon. And so looking at Tuesday's intraday, you can see this the big downtrending line I had shown. We had broken briefly above. This is using the UUP, so the numbers will be different on the side here. But you can see we had this big uptrend. I've drawn it as kind of a wedge. There just happened to be a trend line across these 6 major points. So when I look at this, the one thing that I'm very aware of, obviously, is all of the resistance up in this level with the prior highs. And then, of course, if we're going to roll down on the dollar, how will the equity market respond? And it's not necessarily that as the dollar goes lower, the equity market doesn't perform well. But the one thing that we did see the last time the dollar went lower for a couple of months, we just saw the equity market basically flat. And then once the dollar started to improve, the equity market generally trended higher. I'll call that very subtle at best. But those are two things that I'm watching for to just see if the dollar has enough momentum. So anyway, let's at least consider the fact that the dollar might be rolling over here. And if it started to break to the downside, then at least we'd be ready in the commodity space. Now, we also have one more clue outside of the commodities, and that is in the financials. And the reason I want to say this is because we've kind of had this value versus growth trade going, or cyclicals, so the reopening trade. And what happened in the financials was they actually stalled pretty much when commodity stalled, same sort of time frame, mid to early May to mid-May. And now we basically May, June, July pulled back and haven't really fallen, but we're at that point where I want to at least consider the opportunity for the financials to hold up here and start their next leg higher. And of course, we have the Fed meeting on Wednesday, so that would add to it. Looking at the broker dealers, they're sitting right on their trend line. So this is a pretty important week for them. We want to see if they can start to ramp it back up again. European financials, they broke down through this horizontal support resistance level, bounced hard last week, and now look like they're breaking through this downtrend. So it's at least a place to consider. So if I just went to my daily chart here, you can see that downtrend is trying to break, and if they could start to head higher, that would help a lot. And we can add a few months of data here just to get a feel. But what you see again, basically May, they weren't going very far. These are the European banks. From there, we briefly made a high at the end of the month, and now we've pulled back. And now the question is, are we about to start to turn up again? And we can see the momentum indicators already turned. And when we look at KBE, the US Bank ETF, we're still in that downtrend, but if we were to start to turn, we'd get interested. And what we can see on the PPO, the momentum indicator, it's actually starting to turn up and cross its signal line. So all of this adds up to at least being aware that some of this cyclical trade might be coming back. And so the way we're going to look at that, we're going to jump down right into the commodities and view it that way. So let me just work through some of the commodity charts I have and give you an idea what I'm looking for. So here's a big downtrend on the commodities, and if I just widen out this chart, it'll give you some perspective. But you can see this big downsloping trend line. We're trying to break through it, and we're actually breaking through it to end the month of July. So this would be the first month to break really the trend line that happened from the oil top in 2008 coming all the way down, and now we're starting to break out of that. So a real difference in commodities, and I know commodities have been out of favor for years and blah, 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 blah. If there was a place to look for it, it's when the trend line is snapping, and we're there. So it's an interesting month to at least consider commodities. When I look at the CRB on the weekly basis, what we've got here is a horizontal trend line going back 5 or 6 years, and we're trying to pop out the top of it, and we're actually going to close the month at the high end of the range, which is really nice. Again, commodities, everybody keeps thinking they're out of favor. I actually think they're coming back into favor. So here's West Texas crude, and we're sitting right up here on the 10-week moving average, and if this can bounce up and out of here, we'll have tested the prior highs and then we'll turn and take off. That's a real question mark. We don't have that answer. That's what we're looking for. Here's natural gas, and one thing to note about natural gas, and I've got another chart on this, is when you look horizontally, we have a price spike in mid-2018 But other than that, this is kind of the second highest level we've been at in 7 years. So really an important place to start to pay attention. Heating oil and gasoline, we'd expect those to kind of follow or lead crude oil, or at least move in tandem. What we can see here is gasoline, we broke out above the prior highs. We've just paused here. Now the question is, do we turn up or do we fail? I actually think inventories are shortening in supply. So if we don't have enough inventory, that should raise prices. That's what I'm watching for. So here's heating oil trying to bounce off the 10-week moving average. Again, it's been support basically since the November breakouts. We pull back to the 10-week. That would be the same as the 50-day. And we're trying to bounce out of here and head higher. Same thing on gasoline, trying to bounce out of here and head higher. Again, gasoline at 7-year highs. So it's an important place to consider just from resistance. Can we get through that prior high? And if so, do we go all the way back up to $3 wholesale gasoline? So I think it's pretty important. Now, when we go look at something like copper, has been below its 10-week, and on Monday turned and pushed back up above the 10-week moving average, and we can see that the momentum indicator looks like it's trying to turn up. So the real question is, can copper complete this turn, and does it go back through prior highs? This price level right here is 459. Now if we open up the chart, what you'll see on this chart was 458 was the prior high. So we broke above it, we pulled back down, and now we're trying to take it out again. And so it's not uncommon to actually get up there and pull back, or get above it and pull back. And then the question is, do you find support and we can take off and go higher, or does the chart fail here? And if that's the case, it's a pretty important change in momentum. So we want to see this test of the prior high, and if copper can complete that, then we want to take off to the upside, and we want to at least expect us to go back up to this 475. But the real question is, do we just start the new leg higher? And I think copper can do another thing like it did back here in 03-04. It went on a relatively ballistic surge after pausing for many, many years. And then after it started to go, it literally, you can see we were down around $1 here and went up to $4. That was the kind of move. Well, we've got pressure in housing. We've got pressure in autos. There's a lot of reasons to expect copper to turn. So if copper was going to go higher, we should also see that in the copper miners. And as the copper miners start to turn higher, that kind of gives us the momentum that we need as people are starting to expect higher prices from those stocks. So I like the setup here, and the gold setup isn't as important in the equation, but I think we're energy short is the real issue. And so whether you pick copper as an energy, not really, but it's a method of transferring energy, and we use aluminum for the long network lines, but we use copper in everything, in the cars, in your houses, in small electronics, all that kind of stuff, everything we hold in our hand, all the cords beside our bed. So you can see the change in copper is quite meaningful. It's been quite a ballistic surge here. It's been a double from 220 to 480. And now the question is, will it start to mark its way higher? Okay, so those are the two areas I want to focus on. And I'm going to just go down here to some of the stocks some of the charts I look at regularly and share them with you. So here's XLE, and we broke the trend line. And Tuesday was a relatively weak day in the market overall. XLE was down 1%, but some of the tech names were down 6-8%. They were really taking a hit. So that's one of my reasons for watching here. If all of a sudden we're going to come back into the value trade, this would be an important place to be aware of it and get back on the ride, and perhaps don't own as many tech stocks, but try and get the next move up in the commodity wave. So here's the gasoline refiners ETF. So basically, you could either be an ExxonMobil or a ConocoPhillips, where you have both refining and exploration and production, or you could just be a refiner. But what we see here is we kind of ran up, we got to the prior highs, fell back, and now we're trying to find support in around this $26. It would also be the PPO kind of coming down near zero and starting to turn back up. We're testing the green 40-week moving average line. All of those things are typical that you'll see in an uptrend. The 40-week moving average holds and everything starts to bounce higher. So the refiners are sitting at that test point. And you might have even heard this week Delta suggesting that there was fuel shortages starting to show up in some of the networks for the airline. So I'm going to go to the weekly chart of FRAK. So FRAK is the unconventional oil and oil producers ETF. So basically some of the harder stuff to get, and it's a method of just looking at those as a group. And then we also have XOP, which is the exploration and production ETF. So here we had an uptrend, we broke it, we're coming down, but we're testing this horizontal support. And if we're ready to turn higher, this would be a wonderful place to kind of catch and go. So get a little bit of a pullback. And again, oil got all the way up to 77, went back to 66, and then started to climb higher. So we want to watch and see how these oil-related stocks trade compared to oil. And we can see that the Scooter ranking for FRAK shows it as one of the strongest ETFs out there, and we want to just see if that's going to maintain trend and all of a sudden start to bounce out of here and head higher. So here's that crude chart of weekly. What we see is over a couple of weeks there, we literally went from 77 down to 65. Well, look what 65 is. It's exactly the horizontal support and resistance layer that we'd expect the market to test. So we break out, we pull back, we test it, and we try to go higher. As we watch that chart, we're sitting right on the 10-week. Here's the 40-week down here in green. If we can break above here, so the 10-week is kind of a short-term analysis, but we dipped below it, bounced back up, and held there for the close, and then held for the close. This would be Monday. So we want to just keep watching to see how crude oil behaves, and can it start its next leg higher? And if so, I think we go a lot higher. So it's a pretty important place on the chart. Here it is on the daily. And you can see I have an upsloping trend line, and then literally we dip below it. We come down to this horizontal support and resistance just on the short time frame from March to May. Got down into the high $66 range. Dip below it, see if there's any sellers down there, reversed and closed back up above that line, moved up. Now we're consolidating for 3 days up here. Does oil have enough to actually finish the bounce off of the momentum indicator coming back down to zero? That's where we got support earlier in this rally, and then we ran up from there. So we're watching pretty closely to see if oil can continue to push higher, and if that's the case, we should see these other ETFs follow along. When we look at XOP, so this is the General Exploration and Production ETF, and it actually works a little better than the XLE because the XLE has other types of energy mixed in it. This one is specific to oil. And you can see that even though the overall market was down on Tuesday, OP actually had a pretty tough day. It was down 3%, whereas the market was down about 1%. But commodities usually have these wider swings. On here I have the 20-day moving average, and you can see crude oil held above the 20-day, pulled under it for almost a month, went on a big run, had a dip here below it, And now it's dipped below and we're trying to get back above the 20-day moving average. So now we're using a shorter term moving average just to kind of get a feel. When we look at the XOP, it hasn't been able to get back above, and all of the time that oil went up $9 in June, XOP just went sideways. It really didn't have any power to the upside. So now we're testing whether or not this is done. Are we going to build some sort of a topping pattern here and actually just start to break down below? Or is there room for higher prices and we're about to start to turn higher after coming down with this big dip? So it's an important place to test, but we've also got that backdrop of the US dollar potentially rolling over, and that might even help a little bit more. This was a chart I spoke about, and it was a method where price moves up in boxes. So you kind of break out of a range and then you make another sideways range, and you break out of that range and another sideways range, break out of that, another sideways range. We've done that. Now the real question is, are we starting to make another box lower, or is this just an extension of the current box and we're going to move back higher? We don't really have an answer. What we can see with the XOP, remember the FRAK ETF was very strong. The XOP is this black line, and it's actually now down below the 70% level. But our PPO looks like it's getting ready to turn back up. And again, commodities, you want to buy near the lows, not near the highs, because they're not like a tech stock where they kind of continually run. So on the dips, you want to buy them, and on the peaks, you want to sell them, or at least lighten your position size. All of those things are factors. So as we're watching this, I want to see if my momentum indicator can start to turn back up again, because that would be an attractive place to get back on this oil chart and follow the move higher. So here's the intraday for oil. Just want to make sure this chart is up to date. So it's July 27th, end of day close. And what did oil do? Basically a higher high, higher low, but a lower close. So this was prior day close, and now this is Tuesday's close. We're consolidating sideways. We get inventory data on Wednesday morning. And when we get that data, that will help tell us if we're actually going to start pushing higher, or if we're actually starting to build inventories, because we haven't been building inventories for quite a while. Altogether, it looks like to me, it still looks like a bullish place to be prepared for oil to turn higher and oil stocks to turn higher, especially if the US dollar rolls over. The financials, as another cyclical, look like they want to roll over or roll up and turn higher. And then we have copper as well. So all these are adding together to show a bigger picture. So here's natural gas just over the last 3 years, and you can see this nice breakout and run, even while crude oil has been moderating in June and July. When we look at natural gas on this perspective, this is going back to 2015, and you can see how we're pushing up here to the second highest level, got through any sort of weekly resistance, chart breaking out to the upside. The interesting part is, look at how low the volume is. So is it there's no sellers, or is it that there's no buyers? It's a good question, but we've definitely had a change in volume going back for multiple years. So interesting to watch the chart from that perspective. Okay, let's briefly cover off copper. And again, here's that big picture copper chart, and you can see trying to break back through that 458 level. What I want to know on copper, this is the daily tracking. So copper jumped up on Monday, Tuesday just held at a similar height. And then here's the copper miners. And they were bouncing off the 40-week moving average last week. This week, they're already up 2.5%. So they're pushing higher. They're trying to push higher. And if we look over here on this bar chart, we can see, or the zoom panel, we can see that there was a downtrend here. And we still have not really started to make higher highs. This is a higher than prior week. We'd probably like to get above this 38 level, which take out 3 or 4 weeks of consolidation and actually start to push meaningfully to the upside. So that's probably one of the areas that I'm most interested to see if we can break through and break out. The other thing that we should see happen, we want to see happen, is here's copper miners outperforming copper. And then since the beginning of the year, they basically moved sideways. And now all of a sudden we're starting to make lower highs and lower lows where copper miners are underperforming the price of copper. Until the copper miners start outperforming, that would be another place to just remain cautious. You can see here copper was moving up here, and in general the copper miners were outperforming. And then since this peak in early 2018, we've kind of been downtrending in this ratio and also downtrending in the price of copper. The significant rally we had from 2020 took off to the upside, and the copper miners once again outperformed copper. Now the question is this just a bounce and we're ready to go? You know, maybe something like we had here, we take it back off to the upside, or is this whole thing about to break down and we really need to pay attention? The change in the US dollar would probably help us mark that spot, so we want to be conscientious of the dollar and how it's behaving, and then how do these miners respond. So with the Fed set up, the banks looking at the cyclicals, the oil companies, the copper and materials areas of the market, all of this is interrelated with a view towards inflationary changes. And if we were starting to enter a new inflationary environment, we started to see bond yields moving higher, which the Fed wants, and they want inflation. They keep saying they didn't get it after the last rally, so they want to make sure that inflation is firmly back on board before they start pulling in the reins. So we're actually got a central bank that wants inflation. We want to see copper and oil and all these names turn up. If that's the case, we'll probably see the dollar turn down. But we're right here right now at one of those good inflection points that it's worth watching. A lot of stuff sitting on the 40-week moving average, hopefully to bounce and take off to the upside, or conversely, it all starts to fall apart and we roll down. So really important implications as we head into the end of July here. Normally I like oil and materials heading into the rest of the year. So anywhere around here, and sometimes it's early July, sometimes it's August, I want to be watchful for the change in trend, and if we get that change, get back on the bandwagon and start to look to buy higher. So with all of that said, I think the most important thing to be aware of is the change in these materials, and if they can start to move higher. Here's steel trying to break out as well. So there's multiple areas in this market that we can consider all at once, and just try to watch for this inflationary trade after pulling back, start to break back out again. And if that's the case, we want to get back on the bandwagon. Hopefully that was a pretty informative session and you found some value there for trying to position your portfolio. What we're trying to do is look where the puck is going, not where it's been. And so if we're starting to make this turn, now's the time to kind of get on board with that. If you have any more questions, you can always head over to gregschnell.com, look around the website. There's some free stuff there. And as usual, my Market Buzz covers off new ideas, or what I think are important ideas each week in the market. Thank you for taking the time to join me on Market Buzz. Market Buzz airs Wednesdays at 10:30 a.m. Eastern Time. You can also see the recordings on the StockCharts TV page or on the StockCharts TV YouTube page. Thanks, everybody. Have a great week.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.